Has Christmas left you with a little bit of debt that you hadn't planned for? Maybe that's on top of some debt that you already had. Well, I've got a little solution that might just help ease the strain. So, want to know what it is? Of course you do. Let's go. Hey everyone, welcome back to the channel. My name is Adam. I'm an expert mortgage broker. Today we are talking debt consolidation. So that is paying off some debt with your mortgage. Now, if you find today's video useful, give us a thumbs up, subscribe to the channel because there's loads more like this on the way and loads of videos already on the channel for you to enjoy. Now, let's be very clear from the start. This is not a method of getting rid of your debt or a free thing or a cheap thing to reduce your debt. You know, have an arrangement with your credit providers. I'm not offering to, erase anyone's debt for them. There's stuff like that all over the internet. It's all bad, 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 bad. Don't do any of it. It's only going to affect your credit score. If you start having arrangements to pay on your credit file, eventually you'll get further and further behind. You'll end up with defaults. And that is never ever going to be good. So we want to avoid that at all costs. There are things we can do. There are people I've helped before in the past where they were thinking of going down that road, but actually we've managed to sort other things out for them so their credit score is not affected. This is all about making sure that everything is manageable for you as things get more and more expensive in life. Everything is manageable without affecting your credit score. So that's what it isn't. But it is a way for you to bring all of your monthly payments together into one monthly payment that hopefully is nice and manageable for you and is usually lower than all of your other payments that you used to have combined. And we do this by going to a new mortgage lender, taking a mortgage for enough to pay off the old mortgage that you had, plus all of the debts and things that you wanted to consolidate, all the debts that you wanted to pay off. So that you end up with one new mortgage, one monthly payment, and everything is nice and manageable, nice and comfortable for you each and every month. So we do a new mortgage application with a new lender. It could be any high street lender. There are some that are better than others when it comes to debt consolidation. So not every lender is the go-to. So that's why it's not a good idea to necessarily go on, compare the Meerkat or whatever to look for mortgage lenders for this, because they each have their own criteria and some are more flexible than others. For example, some lenders, if you say you have a credit card but it's going to be paid off, they will discard that in their affordability, so it doesn't affect what you can borrow. With some lenders, they don't believe you. Well, not that they don't believe you, but they factor it in anyway just in case you don't pay it off. So they are the kind of lenders where it's not ideal for this kind of situation. But there's plenty of lenders to choose from. So we've got a new mortgage application, new lender, new mortgage amount, enough to pay off your old mortgage and all the debts and things that you wanted to put in. Now, I say all the debts that you wanted to put in, there are some that we shouldn't really do. There are some debts that we shouldn't really be adding into your mortgage. So those are things like small credit cards. If you owe less than sort of £500 on a credit card, it's not really ideal to be adding that onto your mortgage and paying it off over 20, 30, however many years. So small credit cards. Car finance. Now, this is probably more of a personal one for me. I don't think you should be paying off car finance, especially like a PCP where you have a balloon payment at the end. I don't like paying off car finance with a mortgage because it's a depreciating asset, your car. You're going to change it again in a few years' time, but you'll still be paying for the one that you've got now in 5 years. So I don't like adding on car finance to your mortgage. The other one is sort of loans with less than 6 months to run. If it's going to be paid off soon, chances are by the time we've been through the mortgage application and done all the processing and everything, it is ready to go. It's a month or two in some cases. So you'll be even closer to the end of that loan being paid off. So I wouldn't normally add in a loan that's got less than 6 months to run on it. But if you've got sort of bigger loans, especially for things like home improvements and things, or you've found yourself with a load of credit card debt and you're paying the minimum payment each month but it's not going down, then those are prime examples of things that we can and absolutely fine to be adding on to your mortgage. So once we've done all that and we've added up what we're going to add on and the current mortgage as well, what you'll find is because we're increasing the term, the monthly payment, the new monthly payment should be quite a lot lower than all of the monthly payments combined. Especially if you've got credit cards, you're paying the minimum payment, it's going to take forever to, well, not technically forever, but it's going to take a long time to actually get them paid off. So one new monthly payment over a set term, we know exactly what the term is going to be. You might even find, and people I've helped have done this as well, is that because that monthly payment is so much lower, it's lower than actually you need it to be, and you could maybe afford an extra couple of £100 a month on top because you've been used to paying that each month. And we can get the whole mortgage paid off quicker then, so that's a little hint, an extra little tip there if there's room in the budget for it. Now, the other thing we need to say is that you need to think carefully before securing other debts onto your home. So that risk warning, your home may be repossessed if you don't keep up the payments on your mortgage, is everywhere. It's everywhere you see. It'll be at the end of this video. It's on everything. It's there for a very good reason. If you don't pay the mortgage, your house will be repossessed. So what we're doing here is taking debt that is unsecured. So your loans, credit cards and things, that's unsecured. It's not secured or anything. If you don't pay it, it affects your credit score and no one's going to lend you any more money, but that's as bad as it gets. Whereas if we add it onto the mortgage and you don't pay it, then your home could get repossessed. So that's a very real thing that we need to consider. So we need to think carefully about whether this is right. It's not right for everyone, but if you've got big credit cards, big loans, and you're struggling each month to make the monthly payments and they're just not going down, then this could be the solution. Now, we can either do it as part of your remortgage. So if your remortgage is due sort of soonish in the next 6 months, we can do it now and it will happen when your mortgage is due. If your mortgage isn't due for renewal, your fixed rate isn't ending, you're going to have a penalty if we do that. That may still be relevant, it may still be okay, but if it's not, there is another way we can do this. We can take what we call a secured charge, a second loan, those are the wrong way around, second charge or secured loan. We can take one of those to repay the debts that we've got. That'll achieve the same result. It's a slightly higher interest rate than your mortgage, but it'll achieve the same result. And then when your mortgage is due for renewal, we can then increase the mortgage to pay off that second charge, that secured loan. So we're still achieving the same thing. We might just do it over a couple of stages if there's a penalty there on your mortgage. Now, if this is relevant for you, if you think you might benefit from adding on some debts to your mortgage, once you've thought carefully, of course, you can get in touch with us. There's a link to book a call with us in the description below this video. There's also a link to our website. You can go and learn a bit more about it. There's some frequently asked questions about debt consolidation on the website, so go and have a look at that as well. Book yourself a call with us, completely free, no obligation. We'll go through your options and see what's what. So hopefully we'll speak to you soon. If not, see you on the next video.